In our opinion, this is a sort of pound the table time, especially for names that we love. I mean, if I look...
Pound the table as in buy, buy, buy? Is that what you're saying?
Yeah, especially on the secular growth names. You look at e-commerce, you look at ad growth, you look at cloud computing, big data. That's why when we look at names like a lot of the FANG names, you look at an Amazon, a Facebook, we look at Apple with 1/3 of its market cap in cash. You look at big data names that are getting crushed in this market. This is what I view as a once in a, call it 12 to 18-month opportunity to own the secular growth names where earnings, we've seen the best tech earnings in the last 10 years. And numbers, we could talk about multiples all we want, but you've seen overall numbers come up 20% from where we were a year ago. And we continue to expect that to happen based on all the fundamental growth drivers. So we view this as the time to really go on the whiteboard, put your favorite names, and I think a lot of these names are, I view it as almost a garage sale in terms of some of the prices you'll be getting.
Okay, Dan, I want to come back to your garage sale in just a second. Mark, here's the piece of it that I think a lot of folks are trying to understand. There's a huge retail audience, consumer audience who've been buying into these names because these are the names that they know. This is what we've been told to do as investors. Buy the stuff you use, buy the stuff you know. What do you know this morning, and how do you feel about where things land?
Well, Andrew, I like that setup. We've coined a term called internet staples. Consumer staples, those companies that you buy because you're going to continue to use those products over the next 5 to 10 years. And I think you've got a class of stocks here. They're now called internet staples. It's Google, it's Facebook, it's Amazon, it's Netflix, maybe an eBay that they've got very consistent growth. Google just printed its 32nd consecutive quarter of 20% plus year-over-year growth. And the profit pictures for these names have been improving. Multiples across that group of stocks I just mentioned actually have not changed in 3 years. The stocks have gone up appreciably, but the reason is because earnings have powered that.
What's the price-to-earnings multiple on average of the stocks that you just named? We have
it's
on
a
the
very
screen
diverse
right now.
group.
Facebook, exactly.
It's a very diverse group, but what you want to point out is Facebook and Google both trade at about 23, 24 times GAAP earnings for what Facebook offers you is 40% top-line growth, and Google gives you 20% top-line growth. Facebook's more attractive as a valuation, therefore, but both of them, relative to the market, we think are still attractively priced assets. And you've got some inflection points in this group, too. Amazon just showed you the highest operating margins they've shown anybody in a decade. Netflix is in an inflection point. Margins are going up, and revenue growth is actually accelerating. Look, the fundamentals on this group are purely intact. There's no change in them. We're going to have volatility in the stocks, and we generally like to buy that, those down drips on the stocks, and this is one of those opportunities to do that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.